Hey everyone, this is Day Trader Rockstar, and I want to go on. Going to try to make this the most important trading video you have ever seen. I'm very passionate about what I'm going to say tonight, because we all, are out there. If you're watching this video right now, we all want to pretty much make trading a lifestyle for us. Kind of make it a career. We want to make consistent money trading. There's a couple different type of traders. You can have that long-term investor, or you can have that that shorter term trader who wants a faster return on the money. We're just going to break it down in between traders and investors for right now. And if you were an investor last year and you put your money in the market and just let it ride, most likely you ended up pretty flat for the year. As a trader, the volatility is great, even though that the fear and the uncertainty in the world, which has been causing a lot of the volatility, still made for some wild moves. Now, the problem is that as a trader, we are bound by some of the emotions of the trade. Being human beings, we fall into a little trap where our emotions sometimes get in the way of the trade, and you cannot help be emotional about these markets or these past markets because of the uncertainty out there. There's we're entering times that we've never tested before. There's situations happen across the world where regimes are collapsing. There's economic turmoil in Europe. The Eurozone in general is on the brink of collapse. There's countries defaulting. There's downgrades across the Eurozone. Downgrades here in America. The unemployment is up. So all these factors lead to a very volatile market. And volatility is really the hardest thing to deal with in the market. And volatility basically means fear. Fear and volatility go hand in hand. Fear causes volatility in the market. Fear is and the best way of describing it in the markets are the markets being unsure, uncertain. Uncertainty in the markets brings on fear. And so we have to deal with that. And as a trader, again, we're hopefully out there, you're listening to this video and you want to make consistent money in the market. You don't want to have that random walk through Wall Street and just hope that you're making money in the market and being on the right side of the trade, because the average trader out there trying to do this for a living, listen to a video like this, might be someone who's working part-time. There might be someone who's trying this for the first time. And there's the analyst out there, they'll tell you one thing, everything, you'll hear so many different things and you'll get so confused. There's so much information out there. And, it's because that information is being spewed out there from people who benefit from that, who gain benefit from that. Like I put out a post today and we talk about how we cannot really distinguish due diligence, which is a good fundamental analysis and research, and we can't really separate that from an analyst coming out and promoting something because of their own agenda. Most times someone, an analyst gets out there because they have an interest. They already have a perceived notion or a bias on the stock. And because that happens, that tends to, influence your vision of the stock and stuff. That's one of the hardest things to do, is actually follow someone else's picks. It's very hard to do that because, you want to be able to catch your own fish. You want to be able to feed yourself. You don't want to be dependent on anybody, and you might have different views. And that's how it is as a human. That's how I see. Very hard to do that. So you end up doing your own research. All right. So it really comes down to then trying to, really measure the market and take a look at the market and say, all right, you know what? There's certain things in the world that always work. The Earth rotates around the sun. The moon rotates around the Earth. The Earth rotates on its axis, and these things, happen, and they can be counted on. And sometimes, they adjust and they're off a little, and certain things in nature are off a little, but basically you see the rotation there in certain things. And it's just like the market, sometimes you can look back at the market and you see there's a general way of the market goes. Nothing goes straight up or straight down. It usually goes up and pulls back and moves up and pulls back, and there's a defining trend that's that each time a market comes back down to a specific trend line, it seems to bounce off of that level. So you're able to actually quantify certain levels in the market if you had to look back at it. But a lot of people, again, we're stuck in the market and we're saying, all right, well, I need to make money today. I can't wait to November. I can't wait to October. I can't wait 2 to 3 months before I trade, to give me that really good setup. And now looking at that setup, how do we know that's a good setup? Well, the main indicator we're going to be using is stochastic indicator. And this is just on the daily stochastic. It's just a general, rotation from overbought to oversold, oversold to overbought, and the range through that on a daily chart. And it really maps out the market well. It gives you an indication of when you're approaching a certain level, because you have a level from 20 to 80 that we pay attention. It really goes from 0 to 100. But once you start to pull back under that 20 level or above that 80 level, that tells us a signal is coming. There might be something to look at here. This is keeping me out of the trade unless we get down to those levels, because I could look back and see that the majority of times that level has come into play, there was a nice market bounce. All right, each time, especially that you could have got into that level, you would have not seen a nice little return. Even in a position up here to down here, there was a nice 4 or 5 day rally. Here there was a nice explosive move, and this is again on the daily chart. So all of a sudden now you do have your good high probability setups. You can recognize those, but again, do you want to wait for that setup? And don't forget, anything I talk about today on the buy side goes equally well on the short side. So just because I'm not mentioning the short side, these are actually a trade here, a trade here, a trade here. But there's certain rules that you want to abide by. You want to also tend to take more pullback plays, pullback setups in an uptrending market, and an overbought levels in a downtrending market. It just it just takes the risk out a little bit more, going the opposite side of the trend. All right, so again, that's a basic look at the chart and saying, all right, right now what we've done is we've taken ourselves and we put ourselves in a little window here, a little box that only forces us to trade when we get this setup, when the stochastics and just the stochastics. We're going by a basic stochastic indicator. Now, the methodology of HPS setups, they add to the viability of the setup when we have other indicators underneath it. So the other indicator would be an underlying trend line, a recognizable pattern, support and resistance lines, moving averages, and an important one that we're going to talk about is the layering of the different time frames. Now, this all works as a high probability setup, but to get a faster alert on a better setup, we want to break this down to the 60-minute time frame. I don't know why I just typed that out, but we're going to break this down to the 60-minute time frame, which is 1 hour candlestick. And again, you're still using the same 1433 stochastic full indicator on the stochastics. And basically you're going to get an hourly bar chart of the setups. Now again, what I like to do is just go back and back test each time the stochastics got underneath that 20 line. Look back at it, see how the stock reacted to that level, and see that there was a nice bounce off of that level. So all of a sudden, instead of being 1 to 2 months away, we're getting setups that go from 11:18 to maybe 11:24, 23. So this is about five days away, maybe another 6 days away, maybe 4 days away. Depending on what the stock, you can have setups all the way from 2 days away. So this is a much faster time frame where the setups on an oversold stochastic still come in. Now remember, the shorter the time frame, the shorter the bounce, the shorter the movement, the faster the movement that gets completed, versus the longer time frame, the daily, which you have a better chance of getting a longer term move. But we're going to put them both together. So you have your daily and you have your 60-minute time frames. Now again, you can see that you can measure it out, and you can see a nice decent move, 91.75 to 94.25. At least a 2-point move from there. You got some nice point move from here, 3-point move from there, 75, 16, a 2.5-point move from here to here. So you're getting some nice moves on each indication. So again, this is where you would start to define yourself even more. Now you're only going to be, you want to watch, pay attention to that 60-minute setup, 60-minute setup, 60-minute setup, have the better opportunities there depending on the pattern and stuff. But we could even make the trade even more high probability. All right. Now this is great. This is called this is called a faster term stochastic setup on a 60-minute. It's a very good way of trading this market. It's one of the 1-2 combinations that you want to use. But for your really high probability setups, what you're going to do is you're going to take that 60-minute and you're going to layer it over the daily, meaning that I can't do it like I want to show you here, but I'm just going to go back to the daily and take a couple time frames here. We're just going to pretend I'm going to do this with you. All right, that's October 4th. All right. And this one over here. It's 11:25. That's October 25, 11:25. All right, so we're going to look at both of these oversold levels. Now we're going to overlay. You want to go back to the 60-minute chart and look at 11:25, and you can see 11:25 right here. It was right here. We were oversold 11:25. Nice pullback, oversold on 60-minute stochastics. Now, because the 60-minute and the daily stochastics set up, it has given us a bigger and better signal and a nice little return on that. A nice little return, a big bounce. Again, the timing on this is your entry is here, your exit is when you get into oversold. You don't really worry too much about the embedded stochastics. Once you start hoping or guessing that the market's going to move up further from here, then you put yourself into more risk. So no matter what, you got your entry, perfect entry. You got your move up to here, which was a nice move over, went from about $90 to $93.50. It even moved further up. On a high probability setup, you would probably put a stop in there and probably be able to catch the rest of this trade. Then it rotated back on the 60, and it did get a nice bounce, but smaller bounces. You noticed a high probability setup where the combination of the daily 60 sets up is much more aggressive than this. So now the other setup here, it looks like there was 2 setups on there. October 4th. So I don't know if we could even go back all the way to October 4th right now. October 4th here, right here. Let me go out here a little bit further. All right. Let me see where we are. October 4th. You can see that nice pullback, nice oversold level. So again, this level and the oversold level on the daily gave this a really nice high probability setup. That's the combination. That's what we're going to be defining as the high probability setup. It's a combination of the 60 daily layover. Here was another one right here, the 25th of November. This was the other one, and you can see the beginning of that setup, and it's because these two line up. There's also some other things that we're going to go into in more detail. Now, this is all, I'm putting out this video because I think it's very important for you to really learn the methodology to take the fear and the emotion out of the trade, to give you the highest probability setups in the market at any time. All right, we're going to continue on and look at another stock right now. This is going to blow your mind right now. All right, so here's Monsanto. Here's Monsanto. We always look at the 60-minute chart. Let's zoom this out here. All right, here we go. All right, here's your Monsanto 60-minute. And again, very easy to go out and see that the 60-minute setup's giving you a nice return each time. Pull back here, 60-minute setup. And again, remember, this is just based off of quality stocks, stocks that are in the HPS 40, which is an index which we trade these stocks off of. But this is just a simple technique. This is, again, a simple technique that is, takes the risk out of the market, sets you up in a better, what we do is we're actually taking a pullback in the market and looking for that bounce. But we're taking the convergence of indicators. We're taking the fear out of the market, which the volatility comes in, not really just accepting it for what it is, getting that oversold level and understanding that we have a better position now to get a bounce back up than we did at any point in this level down. Again, we're following basically want to follow the direction of the stochastics too. So, and again, push up, we got oversold level. It was actually a great short-term short setup. Oh, excuse me, I just messed that up. So again, like I said, we don't mention the short as much, but this gives you another good opportunity. Now, out of all these setups that we've just marked down, and this is on 60-minute chart, you're seeing one on 12:02, you're seeing one at 12:10, then 12:12, then 12:14. So some of the setups are just a day or two away, each one giving you a return. I'm going back 1, 2, 3, 4, 5, 6, 7. 7 of them gave you results. Now the big results are when the higher probability setups are setting up. You can see this move here all the way up and this downward channel, but a recognizable pattern, channel, a lower trend line, double bottom, oversold stochastics here on the 60. 12:19 is when this setup takes place. 12:25, 11:25. Let's take a look at them. We go back on the daily chart, and you can see that the oversold stochastics that happened around 12:15 and went to 12:19 gave you that combination. Now, if you go back out to the 60-minute chart, you're really getting the setup here at 12:19. So you're looking at 12:19. You're looking at now that setup being a valid setup at 12:19, because at 12:19 the faster stochastic gave you the tighter entry on that level. We're oversold basically right in this pullback into this channel, and we got this nice move up. And the other one was an oversold level 11:25. 11:25 we came back into an oversold level. Another one was back here in early October, and the other one was back here in August. So out of the last 4 times we have a big return. But what was key excuse me, these last 2 ones, you're able to really take a high probability setup off of both of those. All you needed to do was wait till 11:25. You had the oversold level. You had an oversold level at 12:19. Both of those giving you a much bigger return and a much better setup, even though these were good setups. But an excellent example of the layering, giving you the high probability versus the faster setup. Both of these are quality setups. Both of these are my goal of, with the new section of high probability setups on Day Trading Radio, is to bring you these setups consistently, because you cannot go back and say, well, this wasn't a good setup. Everything pointing, you just have to open your eyes, and you got to believe that you're looking at the signals and just taking the market for what it is. It's a market that we cannot, justify in its fundamentals, really. It gets thrown around by news, world events, fear, volatility, move this market down, and very volatile. And the only way to really profit from that short term, because it's very hard to, again, be a trader in this market and try to hold on to your money and go through the wave like from 11:25 to 12:25 and end up being, no action overall. But yes, you could have gotten 6 points that way, 6 points that way, 3 points this way, 3 points that way, 3 points that way. So it's much better to get the profits when you're able to take the faster setups. And you get the higher probability setups mixed in there. When they do set up, they get alert. So this is now my goal. This is my resolution for 2012, is to only qualify my trades as in this category of trade. I want to have the best setups out there. I want people to lose money if they don't pay attention to these setups. And continue. And now the key to this is an index. How do you keep yourself even more defined? I mean, there's so many different examples I could go through, but you've got an idea of what we're looking at here, right? You got an idea. I mean, you could look back at any stock and look back at, like, here's a 60-minute stochastics on GameStop, and you could see that there was, only the last 2 times it pulled back, it actually got a nice little pop here, and you had a nice little pop here, really. Wow. That was on 12/19. We take a look at 12/19 on the daily, December 19th. You got a nice pullback. Didn't really get into an oversold level, but once you got that crossover here, that really kind of confirmed, whenever you get a good crossover on the stochastics, it really confirms a nice follow-through trend. So because we got that crossover and the combination of the 60-minute, that would probably have been alerted. Excuse me. Talking so much, I'm getting dry mouth. All right. So, again, the purpose of this is really to, make you deal with the volatility, make the volatility, make it a tool for you to use. You need to have these setups so you can get the returns. Being in the market here and trying to guess which way it's going to go is very hard. When you do get a trending market, you have to believe in that trend. When you have a downtrending market, you have to believe in that trend. The larger patterns play out. Now, here's a good example of the S&P 500. We just bring up the daily, and you can see the daily. When this pattern was playing out, we really called the 1, 2, 3, 4 pattern here. Basically, it's a method I use on 3 pivot areas, trade the 4th as a parallel channel, and an oversold daily stochastic. So the combination of that made this an excellent setup. But let's go on the 60-minute chart. And we take a look at the 60-minute chart, and that was, let's take a look at this 60-minute one more time. We'll go back out here. When was this? That was 11:25. All right, so that was 11:25. So 11:25 was right here. Aha. So this was 11:25. Nice downward channel. Oversold stochastics. So the combination of the two. Even though this was embedded down here, this would, again, this is one of the reasons you want to use the overlaying effect, because at this point right now, and this market got a pretty severe sell-off back here in that pre-Thanksgiving week, and that was a very, very steep sell-off, and the stochastics, kind of stayed embedded down here. But it wasn't until we go on a daily, the 25th is when we really got oversold. So once we got down to an oversold level, that was really the high probability setup. Other than that, you could see that the stochastics were very bearish here. So you got to have a rule. There's a rule set that once the stochastics become very bullish or bearish, you do not want to take the opposite of that trade. I mean, if this is pulling back at this point, even though the 60-minute stochastics gave us an oversold level here, this was very bearish until it got back down to here. You wouldn't force yourself to take it, only taking that as a trade here. You really want to set yourself into a good set of rules. And again, looking at the 60-minute chart, even though you did have that high probability setup, look at the secondary setup you have on the 60-minute chart. Whenever you have a channel trade, we pointed this one out too. This was last week. We had a nice pullback on the stochastics, back into an oversold level. We had 3 pivot areas, and the 4th one combined with the 50-period moving average gave us a pretty decent to high probability setup on the 60-minute. Even though the daily wasn't really set up on it. The daily was not giving us a signal. You see the daily pulled back a little, wasn't oversold. You would have probably said, all right, this one's kind of very bearish at the point. We're not pulling back. So it was a setup where you're really managing to see how the divergence is versus the price. And we saw that we're definitely holding near the highs. We're not really pulling back. With the 60-minute setup here is really the divergences here. You pull back real fast on the stochastics. Don't make any lower lows. Remember, that's the real key to the whole methodology, is determine when you're going to see a reversal of trend. And this could be the reversal of trend going into tomorrow now. Just to show you that we got overbought, but we didn't make new highs here. This is a recent high right there, and this is a lower high. And we had, you know, a topping action both and a crossover here. So this is actually a divergence to the downside on the 60-minute chart. And the daily is very similar. So doesn't look too great for the next couple days for the bulls. But a downward day doesn't mean much. It means things are going to set up. The key here is sticking to the methodology, paying attention to the signals. The high probability 40 setup is going to be released this week, and these are going to be the 40 stocks that we base these trades off. So what that means is that what I'm doing here is outlining the steps to force you to only take those high probability setups at any time the market gives them to you. And this methodology takes the emotion out of the trade. So if there is any news out there, you're taking that emotion of the trade. You're just going to stick to the technicals and stick for with the signals. And the HPS 40 will be they'll be tracked. You know, each day they'll be ran through a screener, you know, and a tracker that tells us when they are setting up based off of the required methodology, which is all going to be posted on the site. And you're going to learn the tactics and why you want to get into these stocks like this. So that's where we're going to leave off. We're going to leave off with that. You know, hopefully you get to check out the setups right now. You know, of course, I'll be broadcasting each and every day on daytradingradio.com and alerting you of these setups. But when we get that site launched, you're going to have a nice updated site where you're going to see the setups activated. Everything will be mapped out. There'll be nice videos and everything. It's really going to be a quality thing, and it's really going to be meant to keep you out of the market more than it gets you in it. You know, it's going to give you that perfect setups on a shorter term time frame and on the longer time frame. High probability setups and the 60-minute setup, which is in some cases not as good, but good enough to, I believe, make a profit in the market and actually, you know, have a decent chance in this volatile environment. All right, here's another stock. I want to go over a couple more here, just to really nail home the concept here. All right, Dr. Reddy. This stock I've traded before, and usually always in a downtrending you know, channel. And I've actually picked this stock up on this signal. That was the last time I traded this, probably back in October or something. Right now we can see it pulling back into another channel, so it catches my eyes. We also know that we always break this down to the 60-minute chart, and sometimes you'll see a beautiful thing, really a beautiful pattern here. You can see the underlying trend line really came into play, and you can really establish this range. You know, it's not perfect. It's not, you know, maybe not touching. I could probably bring this down. I could probably touch there. Just have to give it the right setup here. Yeah, it's pretty close to a good channel here. You could see the you can pretty much see the range. So, but what's really good here is you actually start to see the oversold levels, oversold on the 60-minute. So whenever you see this type of setup, you know, nice downward channel, it's really a high probability because you have the recognizable pattern, oversold level, support and resistance lines, you know, recognizable reversal candlesticks. And even at this point we got oversold, but we're staying within the downward channel. We know that the downward channel usually breaks to the upside. So right now, again, we put this on the this one is actually one of the stocks on the HPS 40, and you know, knowing that the downward channel is in effect, I want to take this trade the next time it gets down to this level, or next time it crosses back up to the upside, and we're going to look for a pretty explosive move to the upside. But we also, you know, by going back and looking at a stock and saying, well, each time it gave us an opportunity, it gained an average of 60 cents. So then I would say, all right, well, next time I want to get down into this level, I want to make sure I'm not worried about what could be, but I want to become more of that mechanical trader that says, all right, high probability setup equals 30 to 40 cents. I want to put my target, my limit order in for a 40-cent profit, and my stop is going to be just the same underneath the underneath the entry. Once it starts to confirm, once it gets that crossover, you can add to your position, raise your stop to break even, and you're set to go. But you have to be important about taking your profits faster in this market environment than slower. No more waiting it out. No more, saying, all right, this pattern's playing out. Sometimes I would wait, let it come back, bounce off, where, I'm leaving a good profit on the table here. I'm leaving 40 cents here. I'm leaving maybe 20 cents here, another 40, 50 cents there. And that's good because it's happening every couple of days. So, if I could see this heading up, and have a few hundred shares in a very low risk trade and looking for 30 or 40 cents, I'm banking $100 on each setup as they appear, and it's a better setup than I've seen in the market. So again, just waiting for that setup, and that's what this is going to be. This stock being posted on the high probability setup area. And giving you the alerted area, and when these things do set up, you get that email alert. So that's also important there. That's what's going to really make this a valuable section, is because there's a lot of stocks out there. Put it all together into 40 stocks, and the thing with these stocks will be stocks that that have earned a position here. These are quality stocks, usually trading above a certain price level, but also stocks that trade in certain patterns, work well with the indicators, and have a history of working in these things. And they're kind of they're movers. They're not boring stocks. So you have all these things setting up for you. When they come down, they set up, and an alert goes out, and you have the setups, delivered right to you. So you not have to worry about the scanning process. How do you do this? How do you constantly do this? The work is done for you. These setups are the setups that everyone's going to want to be in, because they're proven setups. The problem is the emotions of a trader get in the way. We are all truth is all guilty of not having that perfect trading style. We're not a computer. We can't hide it. We can have an off day. We can have an emotional day. We can have a greed day. We can have a fear day, where you get scared out of your things. But this is supposed to, this is going to keep you out of those emotions. It's going to give you and when you could actually look back at the last 7 or 8 times that that setup took place, and maybe you don't even want to take that higher risk trade, but just wanted to wait to the daily sets up too. Out of those 40 setups, there's going to be some rotated in and out as the days go on. So today RDY, or tomorrow it might be set up. If not, then Wednesday. And then after that, Deere might be setting up, and another stock, Caterpillar might be setting up after that, and then Qualcomm. So there's always, we want to use this as a, we want to use all this to keep us in this really tightly defined, non-emotional trade zone. We want to become familiar with individual stocks on the HBS 40, so we can profit on them on a consistent basis. We don't want to have greed. We don't want to have hope or hopium. We want to have less risk and faster profits. That's it. That's it. That's the methodology. That's hard to to go against. So it starts this week. It starts 2012. I hope everyone enjoyed this video. If you were interested in more, you can definitely visit me. I broadcast the markets every day at daytradingradio.com. That's daytradingradio.com from 8:30 to 4 o'clock, and then There's so many other great things going on there. So come on by and check it out.